Hi, everyone. A very good evening to those of you joining us from Australia, and a good afternoon to those from Sri Lanka. On behalf of our CA Sri Lanka Australia chapter, I warmly welcome you all to today's CPD event on the recent amendments to Sri Lankan tax laws relating to non-residents. This CPD session will cover the implications of the recent tax amendments, what a PIN is and who needs to obtain one, and finally, the dual tax implications when filing tax returns in Australia. Before we start off, I would like to move on to our country acknowledgement. We acknowledge this land throughout Australia as the traditional lands of the Aboriginal and Torres Strait Islander peoples and recognise their continuing connection to the land, waters and culture of this country. We also acknowledge elders, past and present, as well as emerging, and celebrate the diversity of all First Nations people and their cultures. This includes over 50 professionally qualified First Nations accountants whose knowledge is valuable for the sustainability of businesses and communities throughout Australia. While we meet today on a virtual platform with participants from different parts of the world, I would also like to take a moment to acknowledge the importance of the lands which we all call home and their people. Moving on to a kind reminder on the housekeeping rules today. Please have your camera on and microphone off during the webinar. Kindly note that this webinar will be recorded. In the event that you drop out, you may rejoin using the same link. For any questions that you may have, you may use the chat function at the bottom of the screen, and there will be a Q&A session at the end, which will give you the opportunity to share your questions with the panel. And now we move on to the disclaimer. Please note that the CPD session is strictly for educational purposes only. I would like you to take a couple of seconds to run through the disclaimer in detail. I would now like to move on to introducing our speakers for today. We have 3 speakers. Our first speaker is Suresh Rajadurai. Suresh is a principal tax partner at Gajma and Company Chartered Accountants. He is an associate member of the Institute of Chartered Accountants of Sri Lanka, an associate member of SEMA UK, and a chartered global management accountant. Suresh has more than 16 years of experience in the field of taxation, of which over 10 have been post-qualifying experience. He has formidable skills in finalizing tax matters, reaching settlements with the Department of Inland Revenue Sri Lanka, and addressing tax matters through appeal procedures. He also has hands-on experience in tax planning and monitoring tax compliance of clients of various industries. Suresh is a founder member of BNI Benchmark chapter in Sri Lanka and has played various key roles. He is also a member of the Tax Technical Committee of CA Sri Lanka. He has made several presentations to business owners on budgets, proposals, and tax reforms, and he has also lectured for SEMA, CA Sri Lanka, and the AAT. Warm welcome to you, Suresh. Our panelist today is Sri Pathmanathan. Sri is a co-founder of Ozledge, an accounting and taxation services company in Australia. He is an associate member of the Institute of Chartered Accountants of Sri Lanka, a chartered accountant of CA Australia and New Zealand, an associate member of SEMA UK as well. He is also a past executive committee member of the CA Sri Lanka Australia chapter, and he has also held the post of assistant treasurer. Sri commenced his career at Ernst & Young Sri Lanka in 2004 and then moved on to the private sector. He has a wealth of experience in the field of accounting, auditing, and taxation. He then joined the Australian Tax Office in the year 2014 and now works at the New South Wales Department of Education in Australia as a tax advisor. A warm welcome to you, Sri. And finally, our moderator for today is Ashad Pereira. Ashad is a fellow member of the Institute of Chartered Accountants of Sri Lanka, a chartered accountant of CA Australia and New Zealand, a CPA of CPA Australia, and an associate member of CIMA UK. Ashad has over 20 years of experience in the field of accounting, finance, and taxation. He also specializes in providing migration consultancy services in Australia and is a registered tax agent in Australia. He is currently the principal at Meta Tax and Tax Consultants Melbourne and an Australian migration consultant. Ashad is also a member of the Executive Committee of the CA Sri Lanka Australia chapter. I warmly welcome you, Ashad. And now that we have introduced our three speakers for today, I will hand over the floor to Suresh to conduct his presentation. Over to you, Suresh.
Thank you. Let me share the screen.
Suresh, do you need help to
Yeah,
share?
yeah, no, fine.
Okay. Suresh, if you can put the full screen.
So, can you all see the screen?
Yes, we can.
Yes,
Yeah,
we can.
thank you for the introduction, Dulani. So, in Sri Lanka, from Jan 1st, 2020 up to 31st, 2022, the tax-free allowance for individual was 3 million per annum. With effect from 1st Jan 2023, it has been brought down to 1.2 million per annum. Subsequently, on 31st May 2023, the Gazette notification was issued by the Minister of Finance legalizing the mandatory registration for TIN for several classes of person. Consequently, the Department of Inland Revenue has registered many non-residents who are living overseas for TIN and serve them a TIN. This situation has created, I would say, a terrible tension in the minds of non-residents who are living overseas. So the non-residents are really concerned whether they need to furnish an income tax return in Sri Lanka or whether they should request to cancel the TIN. If it is so, how to do that? So the purpose or rather objective of this discussion is to address those concerns or questions of the non-residents. During my presentation, I will be taking you all through these areas. Applicability of TIN for non-resident, whether the Commissioner General of Inland Revenue has the power to assign a TIN for non-resident, how to apply for a TIN, how to obtain a PIN, once a TIN is received by a non-resident, is an individual income tax return required to be filed by a non-resident? What are the circumstances or non-resident is not required to furnish an income tax return? The tax clearance requirement for the outward remittance to non-resident and the applicability of the double tax avoidance agreement and the computation of the individual income tax liability for non-residents. As mentioned earlier, the Gazette notification number 2334/21 was issued by the Minister of Finance on 31st May 2023. In terms of Section 102, Subsection 3 of the Inland Revenue Act number 24 of 2017, this particular section says the Minister, with the consent of the Commissioner General, may specify additional classes of person required to register under this section. So the Minister has the power to specify the additional classes of person to be registered for TIN. This is the extract of the particular Gazette notification. You can see the additional classes of person, this is the third line, additional classes of person required to register under section 102 of the IR Act shall be the resident persons. The Gazette clearly says this is applicable for the resident persons. So it is important that we understand the meaning of resident person for the tax purpose. Why tax purpose? Because the resident can be defined in a different way for different purpose. If you take the foreign exchange regulation of Sri Lanka, a citizen is a resident for foreign exchange regulation, but for tax purpose, a citizen can be a non-resident. That is the importance of considering for tax purpose. The resident has been defined under section 69 of the Inland Revenue Act number 24 of 2017. There are two primary tests. One is the individual has to reside in Sri Lanka to be a resident. If you look at the income tax law, there is no definition given for the word reside. In that case, we have to go by the general meaning. The general meaning is the individual should have a permanent home in Sri Lanka or his family should be located in Sri Lanka. Other condition is, primary test is, the individual should be present in Sri Lanka more than 183 days or more in any year of assessment. That means simply more than half a year. Also, there are two residual tests. The individual concerned should be a government employee himself, government employee or official of the government, himself and his spouse are posted abroad during any year of assessment, or individual employed on a Sri Lanka ship within the meaning of the Merchant Shipping Act. So one of these conditions prevail, he will be treated as a resident for tax purposes. The Gazette basically has two parts. One is the part A, other one is the part B. The part A is effective from 1st June 2023. It has 14 additional classes of person to be registered for TIN. The members of the Institute of Chartered Accountants of Sri Lanka, this is the very reason many of you who are living abroad, many of the non-resident, got a TIN from the IRD. Members of the CMA accountant, doctors, engineers, professional bankers, architects, quantity surveyors, the lawyers who are practicing at Supreme Court, the person who has a registered business with the divisional secretariat, even if you have a vehicle registered with the Department of Motor Traffic, you should have a TIN. And any person who has acquired an immovable property such as land in Sri Lanka on or after April 1st, 2018 through a deed of transfer should have a TIN. Also, employee who is getting a monthly, who is contributing to EPF more than 20,000 per month. That means an employee who is getting a monthly salary of over 100,000. Employer's contribution is 12% and the employee's contribution is 8%. Individual who obtain approval for a building plan from a local authority also required to obtain a TIN. Any individual who provide a service in Sri Lanka, for such service, they get a monthly income of 100,000 or 1.2 million per annum. These are the 14 categories of people required to register for TIN under the Gazette. Also, Gazette has a Part B, which is effective from 1st Jan 2024. It has two categories of people. One is the individual who has already attained the age of 18 years or more as at 31st December 2023. In that case, individual has to obtain a TIN with effect from 1st Jan 2024. Or an individual who are yet to reach 18 years on or after 1st Jan 2024, they need to get a TIN no sooner they complete the age of 18 years. So the very important question to be answered is whether the non-resident is required to register for TIN under the Gazette notification number 2334/21. As I mentioned earlier, the Gazette says it is applicable for resident person. This doubt has been clarified by the Department of Inland Revenue by the notice published on 30th Jan 2024. This is the extract of the particular notice. If you read the highlighted areas, the extraordinary Gazette notification number 2334/21 is applicable for resident person in Sri Lanka. Accordingly, the said Gazette notification is not applicable in the case of Sri Lankan non-resident. Therefore, any Sri Lanka non-resident person is not required to get the registration as above. So the paper notice is very clearly mentioned. The non-residents are not required to obtain a TIN registration under the Gazette.
Suresh, do you have any technical issue? If you want, I can share it.
No, that's fine. Yeah. So the bottom line or the conclusion is the Gazette notification 2334/21 is not applicable for non-resident. Therefore, non-resident is not required to obtain the TIN under the Gazette. So now the question arises whether non-residents are required to obtain a TIN for any other reasons, for any other purpose. The latest budget 2024 has proposed a copy of the TIN certificate is required to be submitted for the following 4 activities. But importantly, the particular budget has not been enacted through the relevant amendment to the tax law or still not legalized. So basically, this has no legal enforcement as of date. To open a current account with any bank in Sri Lanka, but not for saving account. To obtain approval for a building plan with any local authority. Registering a motor vehicle, renewing revenue license, to register a land or title to a land by the buyer. So the non-residents are required to obtain a TIN for these things, but it has not been enacted. Then the question arises whether Commissioner General of Inland Revenue has the power to assign a TIN for non-resident. If you look at the section 103 subsection 2 of the Inland Revenue Act, there are 4 instances Commissioner General can assign TIN for a person. A person, in the opinion or in the opinion of the Commissioner General, is or may be required to file a tax return. A person who is required to furnish a TIN to another person. Example, a non-resident person is required to furnish a TIN to the bank to open a current account. So if the non-resident is coming under one of these categories also, the Commissioner General can assign TIN. So how to obtain TIN? So initially, a person has to go to the Inland Revenue website, that is www.ird.gov.lk. If you go to the website, there is an option is there e-service. If you click that is right top corner, if you click that, there is access to e-service. If you click the access to e-service, you can see a screen like this. So the person has to click the taxpayer registration. Once you click the taxpayer registration, there are category of people are there. If you are a foreign national, you need to select the individual foreigner. Once you select the individual foreigner, the application will appear. So fill the application and submit the application form. Also, if you are a foreign national, upload the PDF of a valid passport and also an acceptable local address proof. So once it is done, the document will be reviewed by the Department of Inland Revenue, and the department will issue the TIN and the PIN by an email. Also, the individual has an option to get the TIN through manually by visiting the IRD. The application form is available under e-services. So fill the application and submit the application to the primary registration unit of the head office or even regional office to get a TIN certificate. So now many of you would have got TIN plus PIN. Now what is PIN? PIN is similar to when you are applying for an internet banking facility, the bank will provide a password which you have to log in and change it. PIN is a unique identification number issued by the Department of Inland Revenue to access to e-service at their web portal. So what do you do after you receive a PIN? So there is an option, proceed to login. This you can see it from my previous, it is there down, proceed to login. So you log in, you go to the proceed to login and then click the individual taxpayer, then you change the PIN. How do you obtain PIN? If you don't have a PIN, you need to have a PIN. How to get the PIN? I will go back. There is a click on PIN request is there. If you click on PIN request, there are 2 methods you can get the PIN, either by post or by email. Generally, getting by post is going to take more than a month time. So you need to have an email ID registered with the IRD to get a PIN by the email. If you don't have an email ID registered, you can make a request to ci@ird.gov.lk. So who need to have a PIN? A person who is liable to furnish an income tax return required to have a PIN. Is e-filing is mandatory for individual. Up to the year of assessment 2022-23, e-filing is not mandatory for individual. Individual opted to file manually the return of income. But with effect from year of assessment 23-24, it is mandatory to file the return of income through e-filing. However, the Commissioner General can authorize an individual to file a manual return considering the just and equitable circumstances. So is PIN required for e-filing? Yes, PIN and the TIN are required to file a return through e-filing. This is a very important question many of you will have in your mind. Once you receive a TIN, are you all required to file an income tax return? Now, in the case of a company, once you obtain a TIN, simultaneously you get an income tax file. But in the case of individual, there are two steps to get the income tax file activated. Initially, you need to apply for a TIN. Once you got the TIN, there is something called tax type registration. You have to apply for the tax type registration. So first, if you got a TIN, you have to see your tax type registration is active. So go to your login, and when you log in, you can see a screen like this, taxpayer registration. If you click the taxpayer registration, tax type registration request is there. If you click that, there will be a screen like this. So you can see the tax type is individual income tax, status is active. If the tax type is active, yes, you are bound to file the income tax return unless you get it inactivated. So what should you do if IRD open a TIN, but you are not supposed to file an income tax return? It should be understood that TIN cannot be cancelled. Instead, you have to inactivate the tax type. So the same screen is there. You can click this individual income tax. If you click it, there will be a status. You have to change the status as inactive and save it. Then after few days, maybe 3-4 days, IRD will review, and if they are satisfied, they will inactivate your tax type. You also have an option to inactivate the tax type through submitting an application form. That application is available in the e-services. Application for change tax type registration. So you have to select the status, select income tax, and select inactive. And once you completed the form, email to ci@ird.gov.lk. So again, the IRD will review and see whether you are entitled, whether they can inactivate your tax type. If they are satisfied, they will inactivate. Filing of income tax return. Is non-resident liable to file an income tax return? Yes, under Section 102, subsection 1 of the Inland Revenue Act. If the non-resident is chargeable with income tax, he has to file the income tax return. But there are exceptions available, which I will touch little later. So who is chargeable with income tax? Every person who receives an income over 1.2 million per annum is chargeable with income tax. So how do you register for income tax? Suppose you got a TIN, but your tax type registration is not active. In that case, you can't file an income tax return. Then you need to request for a tax type registration. Tax type registration, this I have already shown the screen. So here down you can see when you go to the login and click the request for tax type registration, you can see the screen. Down you can see the highlighted areas. Please select the tax type to be registered. If it is an individual income tax, select the individual income tax and complete the form and submit. Once you submit it, after few days, the Inland Revenue will register for the tax type. Then only you are entitled to file the income tax return. So what are the obligations after you get the registration for tax type? Simply, you have to file the individual income tax return. So there are few instances a non-resident is not required to file income tax return under Section 94 of the Inland Revenue Act. A non-resident but citizen of Sri Lanka, he has no tax payable for the year. In other words, he has no taxable income. So this situation arises when a non-resident citizen does not have an aggregate income 1.2 million. If the aggregate income does not exceed 1.2 million, then there is no taxable income. So non-resident, non-citizen, basically there won't be no tax payable. There won't be any tax payable because all the income will be subject to final withholding payment, which I will explain in detail later. Also individual, it can be resident or non-resident who has only employment income and his entire employment income is subject to deduction of advanced personal income tax, which is formally known as the payee tax. So if the entire employment income is subject to APIT, then there won't be a requirement to file the income tax return. When a resident person or person in Sri Lanka remit a payment to non-resident, there is a tax clearance to be obtained from the Department of Inland Revenue and to be submitted to the licensed bank or authorized dealer, which is the statutory requirement as per the circular number SEC/2022/C/06 issued on 17 March 2023. So if you look at the circular, there are 21 items for which tax clearance is not required to be obtained. If a non-resident has invested in a shares of a quoted resident company in Sri Lanka, when we remit the sales proceed, there is no need to get a tax clearance. A remittance made through a personal foreign currency account of a non-resident, no need to obtain a tax clearance. Even if a student who has gone abroad, his course fee, examination fee, enrollment fee, living expenses, etc., when we remitting, there is no need to obtain a tax clearance. Now, when you apply for a tax clearance, the Inland Revenue will issue a direction stating the applicable withholding tax rate. So withholding tax rate is decided by the Department of Inland Revenue based on the provisions of the Inland Revenue Act, subject to the provisions of the Double Tax Avoidance Agreement. Section 75, subsection 2 of the Inland Revenue Act says, when there is a conflict between the provisions of the Inland Revenue Act and the terms of the Double Tax Avoidance Agreement, the terms of the Double Tax Avoidance Agreement will prevail. This is similar to a situation where when there is a conflict between the husband and wife, generally the wife's decision will prevail. So what is the withholding tax applicable for a royalty paid? This is an example. What is the withholding tax applicable for royalty paid by a resident, non-resident Australia? In terms of Section 84, subsection 1A of the Inland Revenue Act, the withholding tax rate applicable is 14%. But as per the Article 12 of the Double Tax Avoidance Agreement, the withholding tax rate is 10%. So the Inland Revenue will limit the withholding tax rate as per the Double Tax Agreement. So whichever the preferential rate, the Inland Revenue will apply. So how can a non-resident get a tax credit against the Australian tax payable? Once a remitter has paid the withholding tax as instructed by the department, the Inland Revenue will issue a tax deduction certificate. The tax deduction certificate can be used by the non-resident to claim the double tax credit in their country. Excuse. This is the one important area. Tax treatment for non-resident and non-citizen is different from the non-resident but citizen of Sri Lanka. Citizen meaning even dual citizen, PR holders and student. non-resident but citizen of Sri Lanka is entitled to a personal relief of 1.2 million per annum, but non-resident, non-citizen is not entitled for a personal relief. Also, withholding tax on payment to non-resident but citizen of Sri Lanka is not a final tax. Other than the interest is final tax, but there are subject to certain conditions, which I will explain little later. So payment to non-resident, non-citizen of Sri Lanka, such as interest, rent, royalty, service fee, all will be subject to final withholding tax payment. So once a withholding tax is deducted, basically it is dust and done. There won't be any further tax on that. Dividends paid by a resident company to non-resident or even for resident, it is a final withholding payment with effect from 1st Jan 2023. Interest paid to non-resident but citizen of Sri Lanka is a final tax except the following circumstances. Let's assume a non-resident citizen of Sri Lanka is getting from Sri Lanka interest below 1.2 million. In that case, it is not a final tax. The non-resident citizen can claim the withholding tax on the interest as a refund by furnishing a return of income. Also, if the non-resident citizen is getting interest income plus other income, example, he is getting, the individual is getting 900,000 rent income, 900,000 interest income. In that case, we have to set off the 1.2 million. Firstly, again, the rent income, that 1.2 million we will deduct from the 900,000 rent. The balance 300,000 will be deducted from the interest. So up to 300,000, the interest will not be a final tax. That means the individual can claim as a refund for the withholding tax paid on the interest up to 300,000. But in my example, out of that 900, balance 600,000 will be the final tax. So a small example to illustrate this. Assume Mr. Anthony, he is a non-resident but citizen of Sri Lanka. He has the following income for the year ended 31st March 2024. He got a salary of 800,000 per month. He worked 5 months in Sri Lanka. On that, there is an advance personal income tax deducted is 558,000. He also has an apartment in Sri Lanka. So he is getting a rent of 150,000 per month. So 12 months 1.8. On that, advance income tax deducted is 252,000. He also has deposit with the bank in Sri Lanka. On that, he is getting an interest income of 100,000 per month into 12%, to 12 months 1.2 million. Advance income tax deducted on that is 60,000. But in this example, his other income, salary and the apartment rent is aggregating to more than 1.2 million. In that case, his total interest will be a final tax. So how to compute his taxable income? He has an employment income of 4 million, rent income of 1.8, and interest income, basically it's a final tax. So we don't want to consider in calculating the assessable income or taxable income. The total assessable income is 5.8 million. For a resident individual, there is a relief is there for the rent income, for repairs and maintenance. But for a non-resident, even if it is a citizen, there is no such relief. But non-resident citizen is entitled for a personal relief. This is under the 5th schedule of the Inland Revenue Act, that is 1.2 million. So the total relief the non-resident citizen is entitled is 1.2 million. His total assessable income is 5.8. Relief is 1.2. The taxable income is 4.6 million. So on the 4.6 million, on the first 500,000, the tax rate is 6%, that is 30,000. On the next 500,000, tax rate is 12%, that is 60,000. Next 500,000, 18%, that is 90,000. If you look at up to 2.5 million, that means up to 2.5 million, his tax liability will be 450,000, that is up to 30%. The total taxable income will be 2.5. On that, his tax liability will be 450,000. On the balance, out of this 4.6, on the balance 2.1, the individual has to pay the maximum rate of 36, that is 756,000. The gross tax payable is 1,206,000. The non-resident citizen, he is also entitled for tax credit for the APID deducted on the employment income is 558,000. AIT deducted on the rent income is 252,000. AIT on interest income, we can't claim the credit because it is a final tax. So total tax credit is 810,000. Out of, so his gross liability is 1,206,000. Total tax credit is 810,000. So the balance tax payable is 396,000, which the non-resident citizen has to pay. Recently, there was a Gazette notification issued by the Minister of Finance on March 21st, 2024. The Gazette number is 2376/25. This Gazette says, person, including the government institution, shall provide information to the Commissioner General on regular basis. So there are person, including the government institution, they will have to provide information to the Commissioner General on periodical basis. And this Gazette has come into effect. It has already come into effect with effect from April 1st, 2024. This is the extract of the Gazette. It says, the Minister of Finance do by this regulation, third line, Minister of Finance do by this regulation prescribe the information to be shared on a regular basis to the Commissioner General of Inland Revenue as provided in the IR Act, notwithstanding anything to the contrary in any other written law. Persons, including the government institution, shall provide information. Shall mean it's a mandatory to provide information as prescribed in the Gazette. So this Gazette has already come into force. So now the question is, who are the people, who are the persons have to provide the information to the Commissioner General? If you look at the Gazette, there are 6 categories of people, including the government institution, will have to provide information to the Commissioner General on periodical basis. Now, I have given 5. The Registrar General of the Registrar General Department will have to provide information on the ownership or title of the land or property, etc. The Registrar General of the companies will have to provide information on the shareholders, change of shares, etc. The Commissioner General of Motor Traffic will have to provide information on the registered vehicle transfer, etc. Any financial institution should provide information on the current account, details of loan and advances, including the TIN open on or after July 1st, 2024. Chairman of the Colombo Stock Exchange has to provide information on the investment portfolio, transaction of stock, etc. So from this information also, the Commissioner General is going to get additional information. Based on the information also, if the Commissioner feels the non-resident has some transaction in Sri Lanka, they might open a tax file or they can open a TIN. This information has to be provided. The Registrar General of the Registrar General Department has to provide the information on monthly basis. Registrar General of Companies and the Commissioner General of Motor Traffic will have to provide the information on real-time basis. Financial institution and the chairman of Colombo Stock Exchange will have to provide the information on quarterly basis. So this is the summary of, this is the very important point. If you all understand, basically you understand whether you have to file the return or not. So I have classified the non-resident into two categories. One is a non-resident, non-citizen of Sri Lanka. If you are a non-resident, non-citizen of Sri Lanka, basically all the income you are deriving or getting from Sri Lanka will be subject to final tax. Interest, if you are getting an interest from Sri Lanka, the 5% withholding tax will be final tax. Rent, 14% withholding tax will be final tax. Dividend, 15% withholding tax, final tax, including the resident person. Service fee, 14% withholding tax is the final tax. Employment income, advanced personal income tax deducted is the final tax. So if you have got a tin from the department, as explained earlier, you need to check whether your tax type is active or not. So if the tax type is active, immediately you need to inactivate the tax type if you are a non-resident, non-citizen of Sri Lanka. If you are a non-resident but citizen of Sri Lanka, including the dual citizens, PR holders, and the international student, withholding tax is not a final tax. Rent, it is the same withholding tax, but it is not a final tax. Service fee, 14%, it is not the final tax. Interest income is final tax, but above 1.2 million. If it is below or up to 1.2 million, as explained earlier, it is not a final tax. Employment income, it is not a final tax for non-resident but citizen of Sri Lanka. If you have got a tin and if your aggregate income exceed 1.2 million, you require to file the income tax return. So if the tin is open, as explained, you need to check your status of the tax type registration. If it is active and your aggregate income exceed 1.2 million, just you have to file the individual income tax return. That's all from my end. Thank you. Thank you.
Thanks, Suresh. Can you Thanks, Suresh, for that extensive presentation. I think before we go into the question and answers, if you have any questions on Suresh's presentation, please send it through the chat box, so we will give some time to get these questions answered. Before we get there, we will ask Sri, who is joining us from Sydney, to give some perspective from the Australian tax side. So whatever these new amendments that has come through in Sri Lanka, what are the implications for some non-residents who live outside Sri Lanka? So Sri has more than 10 years experience in various organizations in senior positions, and he's the co-founder of Ozledge. So over to you, Sri, to give some perspective of the Australian side of this tax.
Thank you, Asad and Suresh. It was a very interesting and informative presentation. When it's come to the tax for residents in Australia and who got income from overseas, say example, if someone got some interest income or dividend income or any other income, including rental income or any other type of income, if you are a tax resident in Australia, then you are liable to pay tax on global income. It can be income come from Australia, within the Australia or outside Australia, because you are a tax resident. So in this scenario, for an example, if an Australian tax resident who lives in Australia got some bank account or interest making account in Sri Lanka, then what you need to do is you need to calculate your interest income for the financial year. Here in Australia, the financial year start from 1st of July to 30th of June. So because in Sri Lanka, the tax year start from 1st of April to 31st of March. So we need to calculate it correctly for the 12 months starting from 1st of July and ends with the 30th of June and report that income. However, if you have paid any foreign tax in overseas, including Sri Lanka, you can get the foreign tax credit. So if the Australian tax is more than the foreign tax, then you need to pay the difference. However, if the foreign tax is more than the Australian tax, then you don't need to pay tax in Australia. However, you need to report that carefully on a yearly basis. On the other side, Ashad, one of the small reporting requirement, if you have any asset more than 50,000 Australian dollar outside Australia, you need to report that in the income tax return as well on a yearly basis. Then when you bring money from overseas, then you can argue this was my money and I brought it. And on the other side, if you are earning income, you must report in Australia. And if it is tax need to be payable, it should be payable.
Okay, Sri, I think it's very interesting. So as you heard from Sri, so if you have any asset overseas worth more than $50,000 now, you got to declare that in your income tax return in Australia. So there is a place to tick in the tax return. So you got to tick there and say you own overseas asset. And then when you sell that asset, you will have less problems when you try to bring money across. So going from that, Sri and Suresh, I think there was a question as well on coming to the CGT. So most of us as non-residents, we own properties in Sri Lanka or properties in Sri Lanka. Some are inherited, some are purchased. So when you sell these properties, what are the capital gains tax implication that need to be probably you get? What is the implication in Sri Lanka? What is the implication in Australia if you both can touch on this on selling a property that that is either inherited or purchased?
Yeah, in Sri Lanka, basically, if you have a property either inherited or purchased, if the property was purchased, basically it's an investment property, it's an investment asset. So if the property was purchased or inherited before 30th September 2017, the value 2017 to arrive at the cost. Actually, the cost is the value as at 30th September 2017. Then when you sell, there is a sale price. So the difference will be treated as a capital gain. For individual, the 10% is the capital gain tax rates. On the different, they have to pay a capital gain of 10%. But in between, you have incurred any expenses for the property, like let's say you have altered or you have done some improvement to the property, that cost can be deducted from your selling price as part of the cost. Also, when you are selling, if there is a like incidental expenditure, like say advertisement, legal fee or ransom fee, stamp duty, those things also deductible to arrive at the capital gain on that property. But if the asset is purchased after 30th September 2017 or inherited, then we have to go by the market price. We have to go by the price. If it is inherited, we have to get the market price on that particular day. If it is say 2018, then you need to get the market price on that particular date and get the difference as a capital gain and pay 10% tax. Also, the capital gain is a transaction base. So every transaction you need to pay the capital gain tax and file the capital gain tax return. That is the requirement of Sri Lanka. It is so if you are doing a transaction in the month of April, a return has to be filed and the tax has to be paid before end of the next month. Hope it's clear.
So it is the 10% tax you pay on the
Yeah.
capital gain.
For the individual it is 10%.
Asad, when it's come to the Australian tax point of view, there are a couple of things we need to consider here. First, as I mentioned earlier, if you are a tax resident in Australia, you are liable to report and pay tax on global income. However, here we need to consider certain things. Say example, when did you become the tax resident? Have you had this property at the time of becoming a tax resident, or have you bought it after you became a tax resident in Australia? Let's take an example. One of the common scenario, common point, most of us are migrated from Sri Lanka to Australia. Let's take an example. Someone who migrated from Sri Lanka to Australia had the property at the time of migrating to Australia. Then we need to get a valuation at the time you become a tax resident in Australia. From that point onwards, any appreciation will be taxed in Australia. However, there are a number of examples or the deductions you can claim, any selling cost or any other cost incurred to maintain that particular property, any other cost associated to improve that property. Those things can be claimed as a deductions. And after deducting that, if the property is held for more than 12 months, then the 50% capital gain tax discount also may apply in certain scenarios. So we need to consider what type of property, when did you bought this property, and did you had this at the time of becoming the resident or not, and number of scenarios you need to consider. Then after calculating that, we need to consider there is a possibility CGT discount will apply. Then you need to include that into the income tax return. On the other side, any foreign tax credit, if you would have paid in overseas, that can be applied as well in Australia to reduce your tax.
Thanks, Sri and Suresh. So there was another question on this tax implication, then the reporting requirement for an Australian resident when receiving income from Sri Lanka. So I think you touched this a bit, that you need to disclose the asset. But if you are receiving income, obviously you are liable on the global income.
Correct. Let's take a couple of examples. Let's say you have a bank account or savings account where you make interest income or earn interest income. You need to report. Another example is you have a couple of shares in listed companies in Sri Lanka. You might receive dividend, and you need to report that. On the other scenario, a couple of common scenarios are you might have an investment property or rental property in Sri Lanka, and you receive rent income. On the other side, any expenses and outgoings incurred to earn those rent income, including like council rate or water, any repair and maintenance, any interest on that loan to purchase that particular property, any other agent who is managing the fee, those can be deducted. However, the income need to be reported in in Australia.
Okay, good. So it's just coming from that, the same related to same question. So if you get a loan in Australia,
Yep.
and then go and invest in a property in Sri Lanka, what about the interest on that loan? That can be deducted as well, obviously.
It's possible. The legislation says any expenses and outgoing incurred for the production of income is deductible. Let's take an example. You borrow 100,000 from the bank at the rate of 5%, and that particular 100,000 you should have utilized to buy a property in Sri Lanka. If you use it for some non-income producing activity, you only need to claim the portion which is utilized to invest in Sri Lanka. If the 100% of that loan is utilized to buy a property in Sri Lanka and which is utilized to earn income, then you can claim the interest on the loan taken in Australia. It's deductible against that income. And if you buy that property and if you park it there without generating income, then at the time of selling the property, when you are calculating the capital gain or loss purposes, you can add those costs. So it's deductible. Timing can be changed whether it's in the same year or at the time of sale. So depending on whether you use it for income producing purpose or non-income producing purposes, plus at what point we need to decide. So
Okay.
answer is yes, deductible.
Thanks, Sri. So there is a question from Cecil. I think he has income in Sri Lanka, but he's a non-resident. So if you are a non-resident, so his question is, what if you are a non-resident but has income in Sri Lanka, whether you need to pay tax on his global income? That is to Suresh. You can answer that maybe.
Yeah, if he is a non-resident, basically the Sri Lanka tax is based on two principles. One is the residency, other one is a source. So if he is a non-resident, basically in the case of non-resident, any income from a source in Sri Lanka is liable for non-resident. So a non-resident will have to pay tax only on the income from a source in Sri Lanka. So he does not need to pay tax on the global income. So basically a non-resident does not need to pay a tax on the global income. Just only he has to pay the tax in the source in Sri Lanka.
So I think,
Answer is,
yeah, Suresh, go ahead.
yeah. So basically he does not need to pay the tax on the global income in Sri Lanka.
Okay, Cecil, I hope that answers. So that's slightly different from the Australian perspective, whereas Australia, you pay on the global income, where in Sri Lanka, you pay tax on the Sri Lankan income
No,
only.
if he is a resident for Sri Lanka, he has to pay on the global income. This is a non-resident for Sri Lanka. I am talking he is a resident. Let's say he is a resident for Sri Lankan tax, then he has to pay the global. But the question is the non-resident, right?
Yeah.
The
Suresh,
non-resident,
I'll read the question from
yeah,
Cecil. Please explain whether a non-citizen but resident in Sri Lanka needs to pay tax on global income. So this
yeah.
taxpayer is a tax resident in Sri Lanka.
Right. If he is a resident, yes, he has to pay on the worldwide income. So because based on the residency, he has to pay on the worldwide income.
Okay, I think Kavindra has a question. Does Sri Lankan authority share information with Australian government on dividend, interest, and capital gains tax?
Sri Lanka, yes, go ahead. Just
Suresh?
Yes, okay. I used to work at the ATO, but based on my knowledge, at this stage, ATO doesn't get any information from Sri Lanka. However, I believe there are a number of actions taken by Australian government because of the information revolution, and they can share the information. So my simple advice is do the right thing. If you earn income, just report and pay the tax and move on. In Australia, if we get into trouble, the consequences and penalties are heavy, so it's not worth to do anything wrong. So based on my knowledge, I don't think so they are sharing, but I may be incorrect because these are certain, sometimes it's internal information. Even as a staff, we may not know about the behind the scene, whether they are getting the information from Sri Lanka or not, but I can do some research on that.
There's another question. Is there any limitation from ownership of any property for non-residents in Sri Lanka? Like if you are not a dual citizen, is there anything that stops you from owning a property in Sri Lanka?
owning a property, yeah, if it is that is subject to basically the foreign exchange regulations also. Owning a property, there are regulations like for the land, the non-resident, this is for the dual citizen, right?
Yes.
The question is for the dual citizen.
So dual citizens, I think they can own the properties, but if you are a foreign,
Yeah.
if you are non-citizen, can you own a property in Sri Lanka?
Yes. They can own the property, but there are limitations. They can't own all the property. They can invest in the shares, they can invest in apartment, but there are limitations depend on the foreign exchange regulations, and there are limitations. So land, they may not be able to have a land because of the regulations in the land alienation and all. So there are limitations are there.
There was another question. If somebody brings money to Australia from overseas or from Sri Lanka, what is the Australian tax perspective? Do we need to declare that? Is it, do they deem it as an income, or how does the Australian tax authorities take this on the monies that are transferred from offshore to Australia?
It's a very common question, Asad. Normally we get this type of questions. What our advice is simple. When you bring money from overseas to Australia, that is called capital. When you bring a capital, you don't need to pay tax on that. However, there are a couple of things you need to be careful. When you bring money from overseas to Australia, there are a couple of government agencies, including Australian Taxation Office and APRA, ASIC. They may ask question the source. So if someone asks from where did you get the money, you should be able to explain. For an example, in the past, if you have reported that you have deposits or asset over 50,000 and you have reported foreign income, you can show. Or if you receive some inheritance or receive some gift or loan from any family members, you should be able to substantiate in case in the event if the ATO or any other government agencies ask. So the answer to your question, when you bring money from overseas, you don't need to pay any tax. But when you start earning income from that money, the future year you need to pay tax. Only thing is you need to, in case or in the event if anyone asks, we should be able to substantiate. So please keep all the evidence and documents carefully in the event if there is any question come up.
Okay, thanks, Sri. I think now is the time we should give some chance to audience to have some direct questions. You can unmute your mic and ask questions if you have any questions directly from the panel.
Asad, there are a few questions left in the chat.
Yeah, we'll take them up, but I just gave the chance to anyone who wants to speak up and ask
Sure.
any questions. It seems to be that everyone is quiet. So the other few questions that we have in the system, I'll take from the last one. Is the additional information example current account information collected only on non-resident, effect on residents also? I just didn't really understand that. Is this additional information example current account information collecting only on non-resident, effect on residents also? Is that
I think the question is for Suresh, the information sharing between the Department of Inland Revenue and other government organization or banks. So he's asking whether it's only from the current account or only for non-resident or anyone.
Yeah,
The information
no,
sharing.
it's anyone basically, but it's a current account. According to the gazette, it says current account, and the loan and advances, that is something else, but basically it's a current account details. So that bank will have to share current account details of the residents or non-resident.
Right.
So there is another question from Mohammed. Should non-resident in Sri Lanka file a tax return if they only has rent interest and dividend income?
Non-resident?
In Sri Lanka, do they need to file a tax return if they only have rent interest and dividend income?
Yeah, I explained that if a non-resident, if he is a non-citizen, basically it will be subject to the final withholding payment. His dividend interest, it will be subject to final withholding payment. There won't be any further tax on that. So in that case, he does not need to file an income tax return. Hope the answer is clear.
Yeah, so what you are saying is if you are a non-resident, you don't need to file income tax return if you only have social
Non-resident, non-citizen, I'm saying.
non-resident, non-citizen. Yes. If you are
Yes.
dual citizen, then you
Then again that 1.2 million will come to play. If then we have to see what are the income, how aggregate is how much, then we have to see if it is over 1.2 million, he may have to file the return.
So then comes to another type of question. So if somebody wants to start a business in Sri Lanka and want to register a company, so what's the normal process and what are the taxes involved in relation to after setting up the company, and what are the taxes that comes on his way?
Yeah, basically in Sri Lanka now currently there is a value added tax is there. That is, if the annual supply or quarter annual supply exceed 60 million with effect from Jan 1st, 2024, the VAT threshold has been reduced to 60 million. Before that, it was 80 million per annum. Now it has been reduced to 60 million. So the VAT will be applicable if the non-resident person, when their supply exceed the threshold, the VAT will have to be paid, and the VAT rate is 18%. On top of that, there is a social security contribution levy. It is a turnover based tax. So on the turnover, the non-resident has to pay 2.5%. 2.5% of the turnover. There are also different category of people. If it is a manufacturer, is a different way. Manufacturer, then service provider, 100% of the turnover. If it is a manufacturer, 85% of the turnover is liable for 2.5. Then if it is a trader, importing and selling, there are different amount of turnover will be considered for the tax calculation. Then social security, then there is a corporate income tax, which is the main tax. That is for the corporate income tax is there 30%. On the profit he has to pay 30%. When they pay the dividend, if it is say they have set up a subsidiary in Sri Lanka, when they pay the dividend, there will be a dividend tax. So if there is a P or something, when they remit the profit, there will be a remittance tax, that is 14% after the tax. Basically, those are the taxes applicable when a non-resident setting up a company in Sri Lanka. Those are the main taxes. Hope it's clear.
Yeah, that's good. So there's a question, non-resident of Sri Lanka earning more than 100K rental income in Sri Lanka from his property, withholding tax deducted. Is that withholding tax will be the final tax? So I'm not sure whether that's 100K is per month or per year, but let's say it's per month. So will that be the final tax?
As explained, this is non-resident, non-citizen, it is a final tax. If it's a non-resident, non-citizen. So principle is we have to see whether he is a non-resident, non-citizen. If that is the case, basically all the income he is getting from Sri Lanka will be final tax.
So what you are saying is basically if you are a dual citizen, it is not the final tax, then you have to have
Yes.
that 1.2 million criteria coming
Correct,
to
correct,
But
correct.
if you are a non-citizen, non-resident, then this will be the final tax.
Final tax.
So there was also a discussion on this parents earning, there are savers interest that you get for your parents who are pension age, who are on a pension age. So there is,
Yeah.
if you get like 1.2 million interest, you can apply some tax exemption. So if somebody who is here and you have a parent there who is over 60 years in Sri Lanka, I believe 60 years is the pension age, and having some savings account, how do you save some taxes on those interests?
Basically, the interest 5% withholding tax will be deducted at source. Now, every resident, they are entitled for a 1.2 million tax-free allowance. So the senior citizen who are above the age of 60 years, they are entitled to, if they have only interest income and their interest income does not exceed 1.2 million, they are entitled to claim a refund on the withholding tax deducted. there is some, the Inland Revenue Department has published some forms, that is there is an application form is available every quarter. Every quarter they have to complete the application form and submit the application form with the withholding tax certificate issued by the bank. Basically for year of assessment 23-24, they have the senior citizen will have to submit the form all 4 quarters. That means the April to March 2023-24, all 4 quarters, the application form has to be submitted before 30th June 2024 to claim the refund. So once the application form is submitted, the IRD will process the refund and they will request for the account number and transfer the credit. But generally in Sri Lanka, getting a refund is is a serious problem. Generally, it's a very slow process, but I hope the senior citizen thing, it will happen little faster, because generally getting a refund is like a nightmare in Sri Lanka. Hope I answered your question.
Yeah, you did. Thank you. So there are a few more questions. I think we have answered this. Does a non-resident but a citizen in Sri Lanka who is earning income below 1.2 million is required to file a tax return?
Yeah. Citizen of Sri Lanka income, if they want to claim, as I explained, if they are getting income on that withholding taxes deducted at source, then that person should claim the withholding tax deducted as a refund. Otherwise, that he is losing. That's all. Basically, if he is getting a rent income of 1 million, then on that there will be a 10% withholding tax. In Sri Lanka, resident withholding tax for rent is 10%. Then the 10% withholding tax deducted, he can claim as a refund if it does not exceed 1.2 million.
So let's say it's not
Otherwise,
rent. Sorry, Suresh. Let's say it's not rent, but it is a consulting income. So he gets below 1.2 million. He doesn't, they have not withhold any money. Do we need to file a tax return if you are resident?
If we are resident, as I explained, then he is not chargeable. Basically, he does not need to file a return because he is not chargeable for income tax, as his total income does not exceed the threshold.
It's the same for
income.
It's same for non-resident,
non-resident citizen. Correct.
Okay, then there is another question. Any restriction to Sri Lankan resident to hold a bank account outside Sri Lanka?
There is no such restriction. They can hold it as long as they are going through the regulations of the foreign exchange of the Central Bank of Sri Lanka. There is no regulation to my understanding, but only thing we have to go, the person has to go through the regulations of the Central Bank of the Sri Lanka. Foreign exchange regulation says, so if a person in Sri Lanka want to invest outside Sri Lanka, they have to go through a outward investment account. There are designated accounts. So they have to go through, and if they want to invest, they can invest. Likewise, they can open an account, but as long as they are comply with the foreign exchange regulation of the central bank. It's clear. Is it clear?
It's very clear. I think, Siva, you want to ask a question? I think you're on mute. Yeah, you can go ahead with the question.
Greetings to all. I have no questions, only appreciation. We have received very clear information on tax issues. We have benefited a lot. Thank you for the valuable information shared. If we go through, the gazettes, it's very hard to understand for ordinary people. Actually, this is very good information from you, Suresh. Thank you.
Thank you for the appreciation.
Thanks for that. So there was another question. Non-resident, non-citizen, if only having income sources with final withholding tax, should we file a tax return? I think it's the same thing.
Yeah. So basically, no need to get confused. So non-resident, non-citizen, all the income basically subject to final tax. Only non-resident citizen only will have to worry if they are getting income over 1.2 million. Even for them, only interest if they are getting, it is a final tax other than up to 1.2 million. So
So
that has to be,
it's very clear. I think it's up to 1.2
yeah,
million is the threshold. So if you are
yes,
a non-citizen and that 1.2 million does not apply, but if you are a
yeah,
citizen and non-resident, that is still apply. So if you have any
still
income in Sri
applicable.
Lanka, up to 1.2 million, you can claim that threshold.
Yes, exactly.
There is a final question, I think. What are the taxes payable in Australia by a PR holder on a disposable of inherited property in Sri Lanka? I think it's the capital gain tax he's talking about. If the proceeds are received in Australia. Sri, you want to touch on that?
Okay. Inheritance is called gift, and in general, we don't need to pay any tax if you have received this as a gift. However, in certain circumstances, if at what point the inheritance is received and what was the condition for the previous person, it might change. But in general, if you receive an inheritance through your parents or someone else's will, and it'll pass as a gift, then there won't be any tax on the inheritance that you received as a gift.
Okay, I think that's all from our panelists. Thanks, Suresh and Sri, for this contribution. I think I will just pass on to for the vote of thanks.
Thank you, Asad. I hope all you can hear me. It is 8:22 local time here. I hope you can stay with us another couple of minutes because I have to make 2 announcements at the end. If you can unmute, please do it now and give a warm and put your hands together and give a round of applause to our wonderful panelists, Suresh, Rajadurai, Sri Pathmanathan, and Asad Pereira. Gentlemen, what a wonderful effort. We, on behalf of the CPD committee, we greatly appreciate your time and effort. Today's Zoom operators were Krishan and Isuru. Let's recognize their effort, putting all of us together. And also we were warmly welcomed by Dulani Samarajiva. Greatly appreciate your effort. And also I have to highlight over 200 participants from various locations joined us today. We hope all of you enjoyed the session and gained valuable information. We, the CPD committee, also extend our gratitude to our counterpart, the CA Sri Lanka, as well as the CA Sri Lanka Australia chapter for their valuable support and guidance throughout this session. As I mentioned, I have to make 2 announcements. The investor forum is coming up, which is on the 6th of June, which is in Brisbane. If you are around, you can join the event. And also the Chartered Ball, one of our signature events of the year, is on the 8th of June. CS Sri Lanka President Heshan Kurup will join us on the day. This will be an in-person event and happening in Springvale here in Melbourne. With that is the end of the program. I hope all you enjoy the event. On behalf of the CPD committee, thank you and see you at the next event.
Thank Thank you.